Hi, my name is Christian Waldegrave, market analyst with Teekay, and I'm going to give an update on the tanker market for February. In February, we saw tanker rates dip slightly from what we saw in January. Aframax came in at about $14,000 a day, which was down from around $18,000 in January, and the Suezmaxes averaged about $22,000 a day, which was down from around $30,000 a day or so in January. And what we've seen is that although there's still quite a lot of cargoes and quite a lot of good activity and fixing going on, we've seen now that some of those seasonal factors which gave a bump to rates in January have started to ease. So transit delays through the Turkish Straits and in the North Sea and in the Caribbean region have now started to ease off as we move through winter and into spring, and that's led to a bit of a softening in rates. What we've also seen as well is that oil prices are very high. They reached a 9-month high of $125 a barrel during February, and a lot of that's to do with some of the tension that we're seeing with Iran and some minor supply disruptions from places like Syria and the Sudan as well. And so those higher oil prices in time might just have a bit of a dampening effect on demand, and of course what they also do from a tanker market perspective is they give you higher bunker prices, and so that affects our overall earnings as well. So looking ahead into March, we could probably expect that rates might soften a bit more now that refineries as well are looking to go into seasonal maintenance, and that might just lead to a bit of a softening in rates, and unless we see a bit more of these tail end of these seasonal factors coming through. But I think in general now we're moving through Q1 and into Q2, which is generally the weaker time of the year for tanker rates, and so I think that's what we're going to expect going forward. On the positive side, we're still seeing that there's very few new tanker orders being placed. Probably just we've seen a few in the MR sector, but nothing in the crude. So that means that through the course of the year, as the order book rolls off and no one's placing new orders, then that should lead to lower fleet growth. So we still expect that the tanker market, although it will be weak over the next few months, will start to recover again towards the end of 2012 and set us up for a stronger market in 2013. So that's our review of the tanker market for February, and we'll talk to you again next month.